Hi everybody, welcome back to Ox Talks. It is Tuesday, November the 14th, 2023. Appreciate all of you being here and watching the video. If you're enjoying the content, please subscribe to the channel, like the videos, share the videos with your family and friends. We need to get this stuff out to as many people as possible so everybody is the best equipped to deal with the unfolding situation with the economy, with the consumer, and with generally what's going on in the world. So for those that are slow to wake up in your family, please stay the course and share the videos and other videos like this. Well, obviously I need to address the markets briefly. This is not a market wrap, but I want to address them because the stock market was up huge across the board today on the heels of the CPI report coming in unexpectedly below estimates. It looks like the Dow put on about almost a 500-point gain today, up over a 1.5%. The S&P put on a big gain, up like 1.8%. NASDAQ was up over 2%, I believe, 2.3%. So we have a 10-year bond yield that is cratering, given the CPI data. The 10-year bond lost about 18 basis points today, down around 4.43%, and it hasn't been that low for quite a while now. I also saw that the Dixie, the dollar index, was getting crushed. It was down like 1.5% today. The USD, the DXY index was down just over 104. It's been up in that 106 range for a while as well now. You know what else did real well is gold and silver. Last I checked, gold was up about $16 according to Kitco. Silver was up almost 80 cents. Those are nice gains on the metals. Obviously, that has to do with the falling yield, the falling dollar. Metals do well when the yield's coming down and the dollar's coming down. But also, you probably have, those in the market now that are thinking that given the CPI numbers today, that the Fed will reevaluate its position and possibly hold on rate hikes, possibly even reverse course. I'm not one that's convinced of that. I believe the Fed probably still needs to stay the course and will stay the course in terms of hiking. I could be wrong. I definitely don't profess to be an expert. It's something that we all have to keep an eye on. But, gold is going to rally as well when it believes that the rates may be coming down. The reasoning is the opportunity cost of holding gold is not as great when the rates are lower. So again, I'm not a financial expert. I'm not a financial analyst. That's just my take on what I see influencing aspects of the market right now. Well, one thing that's not doing real well is Home Depot and their outlook. And this is important because it comes back to the fact that, by the way, Home Depot stock, I saw it close up about 6% today, over $300 a share. But the CEO of Home Depot is out warning about weak guidance and weak consumers, and they are forecasting further weakness into 2024. From my perspective, Home Depot is a bellwether stock. It shows not only it goes to what the consumers are doing. Are they spending money to fix up their homes? Are they spending money on home improvement projects? And do they have the funds to spend this money? So, the article from Home Depot I thought was very telling. It's from CNBC. It says Home Depot's quarterly sales declined 3% from the year ago period, but topped Wall Street's expectations as customers chipped away at more modest projects at home repairs. Says the company indicated caution about the coming months and narrowed its full year outlook. It said it now anticipates sales will fall by 3 to 4% from the prior year, compared with a previous expectation of a 2 to 5% decline. Home Depot expects earnings per share to slide by 9 to 11%, compared with prior guidance of a 7 to 13% drop. It says, yet shares of the stock rose nearly 6% in midday trading. It says, still, Home Depot has not emerged entirely from a tough stretch for its business. In an interview with CNBC, Chief Financial Officer Richard McPhail said the company's results reflect that this year is a period of moderation in home improvement. That's a polite way of saying our customers are broke. It says, quote, a customer who might have remodeled their entire home may be opting for a partial remodel, he said. Maybe they won't redo the entire kitchen. Maybe they'll just do the countertop and backsplash. And so it's really just the downscaling of projects that we've seen. What it is the downscaling of the consumer and the downsizing of the consumer's ability to do these projects and to shop at stores like Home Depot when they're barely able to afford putting food on the table and to cover their mortgage, insurance, and or rent payments. It says Home Depot reported net income of $3.81 billion or $3.81 per share, down from $4.34 billion or $4.24 per share a year earlier. And revenue fell from $38.87 billion in the year ago period. So Home Depot is not singing the rosy picture necessarily that the stock markets would lead you to believe, given today's close. The article finishes by saying shares of Home Depot have fallen nearly 9% so far this year, trailing behind the nearly 15% gain of the S&P 500 during the same period. Let's keep a watch on what happens tomorrow. A lot of times the markets will have a knee-jerk reaction higher, and then they settle out in the coming day or days. Excuse me, I'm going to turn this monitor off on my computer. It gives a glare on my face. I apologize for that. Okay, next, let me just address the CPI numbers. This is off the Hedge today. It says, following 2 months of hotter than expected prints driven by surging energy prices and healthcare, the October CPI print was expected to slow materially from the previous month. And the expectation was from 3.7 to 3.3 on the headline. I said CPI missed across the board with both the headline and core prints coming in below expectations on both a sequential and annual basis. Starting with the headline CPI, it came in at 3.2% below the 3.3% expected, while month-over-month CPI also missed expectations, printing unchanged at 0, below the consensus of a 0.1% print and sharply below last month's 0.4% print. It says a similar picture emerged from core CPI, where October month-over-month print was 2% below the 0.3% consensus. Okay, so what does this mean? The markets are going to interpret this and extrapolate this to mean that the Fed's done and the Fed's going to reverse course. I addressed it a few minutes ago. I don't personally believe that is the scenario. But at the end of the day, what does this all mean for us, for Main Street, for the consumers? Obviously, if prices start to moderate a bit, that will be helpful on everyone's pocketbook at the grocery store. Certainly, this may reverberate into the mortgage markets and have bring down the 30-year mortgage rate a bit. But at the end of the day, we have high unemployment. We have companies laying off workers left and right. We have really bad data going into the holidays and companies reporting negative projected revenues or a downturn of revenues going into next year. I don't think this changes that fact. So everyone, let's keep our eye on the ball. The cheerleaders will, of course, spin this for days in an effort to keep the stock market buoyed up. And I think you might see a settling out of everything in the coming days when the reality hits that this doesn't change the fact that the consumer is tapped out right now and simply doesn't have the ability to spend and take on any more debt. Does it really matter if that mortgage rate is 8% or 7% or 6%? Does it really matter if that car loan's 9%, 8%, or 5%? If the consumers don't have any more ability to borrow and they're tapped out, it doesn't really matter, does it? At the end of the day. So my 2 cents on the financial status and the economy and the markets today. I wanted to address one more issue that came up. My mom called me yesterday out of the blue. It was middle of the day, and I was here buried in a bunch of projects, giving some thoughts to the video, and she wanted to tell me that I was paying attention to the fire up in Los Angeles. And I said, no, Mom, I'm not. I'm here working. I have meetings. I'm responding to emails. And she said, well, you have to, have to investigate this because it's going to impact, traveling for Thanksgiving. I said, Mom, Thanksgiving is 10 days away. I don't know what you're talking about, but, maybe I'll see something on the news about it tonight. Anyway, this morning I woke up, an article popped up, that I wanted to read. It was from, I guess, SF Gate, California publication. And it talks about this massive fire that I had no idea even happened. Evidently, a couple days ago, it says began shortly after midnight Saturday when a fire started in a storage lot on the 1700 block of East 14th Street below an overpass, burning through parked cars, trailers, wood pallets on both sides of the Highway 10, Interstate Highway 10, which is the main artery that comes through Los Angeles. This article says that about 300,000 cars travel through that area every day. And evidently this fire was so bad that it damaged, or they're thinking it damaged the structural integrity of the overpass where this fire was burning. It was like an 8-acre area. And it also destroyed the support columns that are holding up this overpass. Long story short, they have closed the I-10 freeway indefinitely at a stretch in Los Angeles. It says the I-10 freeway between the 110 freeway and Alameda Street is closed until further notice, Caltrans said. It's a big deal because you have, like I said, that many travelers using that road every day. But how is, now all of those travelers have to find alternate routes. You have the 10 freeway being a major artery as well for, for goods and products coming in and being disseminated through the port of Long Beach. So the article says, the closure of Interstate 10 has prompted state of emergency declaration by Governor Gavin Newsom. As of Saturday afternoon, there's no estimated time for reopening the major artery that runs through the heart of LA. And it says it's disrupting in every way, whether you are talking about traveling to and from work, or your child care plans and the flow of goods and commerce. This will disrupt the lives of Angelenos, the mayor said. Beyond a massive traffic headache, the closure is expected to be felt well beyond the metropolis, including possibly slowing the transport of goods from the twin ports of LA and Long Beach. Federal officials have said the ports handle more than half the goods coming into the country. So this isn't going to be resolved. This isn't going to be resolved in a couple of days, and it's also not going to take a couple of months. Federal Highway Administrator Shalon Blatt told the AP. But whether it's weeks or months is still too early to tell. Wow, you talk about the flow of goods. We have a just-in-time delivery system where shelves need to be restocked every 3 days. Obviously, this is local to the Los Angeles area, but look, you have goods coming out of those two ports going on the 10 freeway, and that's how they make their way east, all the way through Arizona and into the other states. So these are the kind of things that we obviously can happen, need to be prepared for. I remember back in 1994, I was living in Los Angeles. I think I was in my second year of law school, and which obviously dates me a bit, but we had the Northridge quake in 1994. And I recall I was going to school downtown LA during that period of time, and then commuting up to the West Side every day for a job and with a law firm. And I remember that earthquake buckled the 10 freeway in Santa Monica, just east of the 405 freeway, if you're familiar with the LA basin. And literally, it buckled the freeway. It looked like that. it was amazing because we drove down there and would stand next to this thing, and it was, you know, the sheer destruction that took place. But it gnarled traffic in West LA for a long time. It was, I don't know, 6 months or more before they were able to demolish that section of the freeway and rebuild it. Where am I going with this? I guess that's a good point. I'm not trying to ramble. I just thought it was a story that I would share with you, because these are the kind of things that, you know, you have to be prepared to plan for, not only in terms of your time, but in terms of availability of products, and just generally being able to, you know, address emergency situations. So with that being said, I will keep it there today. It's about 15 minutes in length. Please get your exercise in today. Your physical fitness is very, very important for obviously your physical well-being, but your mental well-being. Go get those steps in today. Get some push-ups and sit-ups in, you know, and please stay hydrated. I will see all of you tomorrow, and we'll watch the markets continue to react to the CPI news today. So standing by. Have a great night. Bye.